All right. Well, good evening, everybody, and welcome to the second week of Your Money Matters Financial Empowerment Show, where we are seeking to move the culture forward through you all listening and taking a financial journey with us in 2023. Yes, I'm still talking about goals and things. Hopefully, you're keeping up with them in 2023, but moving things forward as it pertains to money and finance. So, we want to put it out there as much information as we possibly can so that you can be financially free in 2023. So, this week we'll be talking about tax talk, right? Because we all know that yesterday was the day that you could start filing your taxes. And we thought it would be a good idea for people to have a guide, some information that they can use when going into this tax season when it comes to filing. So today, I've invited a very special guest, someone extremely near and dear to me, probably a part of my financial growth and development, Miss Michelle Robinson. And to tell you a little bit about her, she went to Chichester High School where they were taught how to prepare taxes, some things that they never taught us in school, right? So they definitely don't make them like they used to. But since then, she's been doing taxes, guys, for over 50 years, right? That's a long time to have to learn about tax laws and all of that stuff. And she does that by attending Newman, Villanova, and Delaware Community College. She belongs to the Society of Tax and Accounting Professionals and in the National Directory of Registered Tax Return Preparers and Professionals LTD. So I think we got the best of the best on here to talk to us about this upcoming tax year. So greetings to you, Miss Lovey, Miss what you want me to call you, Michelle? You want me to call you?
Whatever, whatever. Lovey's fine. Miss Lovey's fine.
All right, Miss Lovey. So, I am like more than honored to have you on the show this week. Tell me, what do you enjoy about your profession that's kept you going all these years, 50 years?
I love helping people. A lot of people, like you say, do not know anything about taxes.
Sure.
We're very ignorant to it. Um, so when people come in, I like to tell them from the beginning. I like to definitely talk to the young people because they don't know.
Mhm.
So I just more of an educator, just to let everyone know how the taxes are supposed to work.
That is fantastic. So very very powerful, especially with the younger generation. They certainly need to know. And again, these things are not being taught in school. So, how many staff are you currently employing to help people? Because I know you've been in business, and your business is just growing rapidly. How does that run?
Well, I'm the only one that does the taxes.
Gotcha.
So it's just me in there doing it, but I have two employees and I have about five volunteers that comes from the church or my family that comes out that not doing anything to help me get everybody prepped to come to me so they don't have to stay and sit so long and
Mhm.
all the information is there. So that eliminates me to have to go and ask them this and ask them that. Everything is done. We greet them and we start from there.
Okay, so you definitely have a pretty good system of how to service the community. So tell me, give me one fun fact. What should we know about you?
Ah, I love to laugh. No, I love to see the people's face when I tell them something from last year and they come this year and I say, "Oh, look, see, your money works. You did what you were supposed to. You don't owe." And that makes them happy. And just to let them know, just their knowledge, to have them to know what's going on makes me, because they're interested in learning and they want to know. So
That's
I enjoy that.
Indeed, indeed. Okay, so we'll get right into it. I don't want to take up too much of your time, but we do have some questions. Some of which we had people who wrote in on social media and had tax questions that they wanted to ask for the 2022 year. So let's start with who should be filing taxes.
Anyone that works that earned any money that gets a W-2, I'm sorry, a W-2 should file their taxes.
Okay. No matter how little they made
No
or
matter how little, because the state does tax you, regardless if you make $1, the state is going to tax you. So yes, you should file your taxes.
beautiful. What's the filing dates for this year?
January 23rd, and it ends April the 18th this year.
Okay. All right. Very good. A little bit of
A little
a
bit more
break
extra
there.
days, yes.
Right. Okay. Very, very good. Can you explain like what are some well they I know that they have tax extensions. Why would someone file for a tax extension?
Mainly, they file for tax extension if they're not going to have it done by April the 18th. They need more time. But everybody feels that if they don't do their taxes by April the 18th, they need an extension. And that's not true. You have 3 years to file your taxes. Now, the only point is if you owe, then you're going to be penalized and taxed. So if you didn't file your taxes within those 3 years and you owed, say, 2 years ago, you're going to be taxed every single day up until that part. But if you do not owe and you don't feel that you're going to owe, then you do not have to do an extension. But the extension will give you 6 months' time to file your taxes.
Okay, okay. That was something that I did not know, and that is definitely something people need to know. Because you don't have to go through the hassle of the paperwork, because I've done that. The hassle of the paperwork, you can file at any time. So that's definitely good to know when you got the 3 years. Absolutely. Jeffrey in New York wants to know what kind of taxes should he be filing as a business owner?
He should, if he's a single sole proprietor, he should be doing a Schedule C as a business tax preparer. So he
Okay.
does this, and it's all one. So it's not like you have a business and you file that business separate and then you file your personal. A single business owner files that all together.
Okay. If he's made a certain amount or
It
like
doesn't matter.
doesn't matter. Okay. All right. Very good. And a Schedule C is just a different type of document.
The Schedule C is for the business people.
Gotcha.
It's their profit and their loss.
Ah, okay, okay. We getting some major knowledge, dropping some jewels on us. What's the difference between a 1099, 1040? I've heard something about a 1040 EZ or something like that. What are those filing statuses?
Well, they haven't did 1040 EZs in a while. Now, a 1099 is mainly what they are putting your wages on. So and there's about 20 of them. So there could be 1099 miscellaneous, NECs, interest. So they are wages, and your 1040s is what your document is to file your taxes.
Ah, okay, okay. Gotcha. Melissa in Orlando, Florida wants to ask, what are the different filing statuses like head of household, things like that?
Well, there's head of household, there's single, there's married filing separate, and there is widow. With a child under 12, you can file as a widow.
Okay. What's the advantage or disadvantage? Well, I guess there's no disadvantage, but what's the advantage of those head like I know head of household, but I've heard single zero. I've heard a few different things.
Well, you're talking two different things, is correct. your your head of household, what you're saying about single zero has to do with your W-4s. On
Okay.
your 1040s has to do with your standard deductions.
Okay.
And that's where the singles comes in, your head of household. And everybody feels that because they own a house, they're a head of a house. And that's not true. You have to be a head of someone to have to be a head of household. So I get clients that come and say, "Well, I own a house, but they don't have no kids." So we ask, "Well, who are you the head of?" So they can't. So they have to file single.
Okay. Okay, that's perfect. You breaking down some misconceptions.
Yes, there's a lot.
Nice. So what filing statuses, single, I'm pretty sure I've heard people say, if they don't have children, they don't get as much money back. But is there a breakdown for single versus people who may have dependents? I know it's more, but is there a breakdown of the amounts?
Well, people have
I know it
your
depends on what they
right,
made.
your single and your married joint all has to do with standard deductions.
Mhm.
And they are a part of so that you do not have to pay that much taxes. So it really depends on your situation.
Okay.
You know, a lot of people are married and maybe their husband or their spouse is not working. So they don't claim they say they want to claim their spouse. Well, you can't claim your spouse. So it's best that you do married joint. So if your other spouse is not working, file married joint because you'll get a better deduction than if you try to do married filing separate or head of household, which you cannot do because if you're married, you can only file two ways: married joint or marry separate if you are living in the same house.
Okay. Well, that answered the next question. Um, because that was what someone wanted to know, if it was better to file a joint return with your spouse or separate. So
Well,
you just
and then it all depends on the money and how much federal taxes is taken out. When I have couples come in, I do try to do, is it better for them to do married joint or marry separate? Sometimes it's a benefit and sometimes it's not.
okay. Gotcha, gotcha, gotcha. Very good. How does it work if one of your dependents is now working a job? How do you does your filing status change?
No, you could still continue to do, if you're doing head of household, if it's you, for instance, you would do head of household and claim your child. Your child can file his own taxes and still you can still claim them. The only catch is they have to put down that they're being claimed by their parent.
Gotcha.
And a lot of the young ones come, they get their W-2s and they go on Terrible and they hurry up and file their taxes. And now their parent is stuck because now they can't claim them as a dependent. So you have to put down that you're being claimed in order everybody can get the deduction as opposed to.
Okay, okay. Now that was a big one, right?
Yeah.
Because we're all, including me, we have teens that are, starting to work and things like that. So absolutely, that's huge. Malik in Atlanta wrote in and wanted to know, what are some things that can be written off or deducted?
Well, now they have cut a lot of things out, so there's not too much to be deducted unless you have a business. And then anything that you purchase for the business can be a deduction. But as far as your regular individual, they really cut everything out. So it's just your mortgage is still there, so your itemization is still there, your mortgage and your taxes and your charitable contributions. So
Okay.
a lot of it has been cut out.
See, and that's something that a lot of people did not know, right?
Yeah,
And that major key, she said, if you own a business, that sounds like where you can deduct the most,
right.
right?
Yes. Hmm.
So, to all you entrepreneurs out there, there's some things that we need to know. Absolutely. Okay. To itemize or to not itemize, is there a certain amount of money that you have to have made to itemize?
It's not so much of how much you make. It's like I said with the standard deductions, like as far as single and married filing separate, you have to itemize over $12,950. So that's including your mortgage and your interest. Head of household, you have to itemize more than 19,400. So the government made it higher with the standard deduction. So it's hard to itemize unless you have a mortgage with a high interest and you pay high taxes or you contribute a lot of your income.
Okay. All right, that's huge. Those are definitely some numbers that we need to know. Um, Explain the state tax versus the federal income tax.
Well, the state tax, 9 times out of 10, you will not get a return from your state tax. The
Mhm.
state usually tax you exactly what is for. Pennsylvania does especially. They will tax you exactly, so you will not get a return. One thing that you have to realize on the state, if you're low income, you can get a return on the state. And for instance, if the children, as you say, file their taxes, that is working, or teenagers file their taxes, and their parent is getting a state return, then the child can get a state return. But if the children go and do it their own self, again, this is where people lose out on their money. Federal is much different. It's based on the total wages, and it's a whole bunch of tax brackets in order to file your taxes. So they're way different, way different. And each state is different. Some states has credits and some doesn't.
Okay, okay, very good, very good. Definitely need to know that one. And I sometimes I wondered why the if you got a state return, why it was so low, but it makes sense now. They're taxing you exactly what
Right.
you need to be taxed.
Right. And there's only small itemization like union dues, work clothes, and then by the time you use that, you might get $25 back. So people might have paid $3,000 on union dues, and by the time it gets calculated, it comes down to about $25. So
Okay.
very
So
minimal.
you brought up something else. So uniforms, mileage, what are some other things?
That again is on mainly on the state side because
Right.
you probably will not have enough to itemize on the federal side. Your union dues, your uniforms, especially like for nurses or the scrubs, um, anything that you cannot wear outside is considered uniforms. So if you go to work with a suit on all the time, that is not a uniform. So it has to be something, definitely a uniform.
Okay.
And work clothes.
If you at work at home business, because a lot of people are now doing the work from home thing, what are some things that you might be able to write off? I know I heard something like you can write off your internet, things of that nature.
It's in there, but again, you're under that high deduction. So if you cannot get up to that itemization of that high deduction, you're just working at home.
Okay.
So you're working at home.
Yeah, I mean, because I know people will try to squeeze out and whatever they can squeeze out. So
Exactly. Hmm.
that's cool. Are there any new tax laws that we need to be aware of?
Well, they took away a lot of the tax laws, they took away and stuff. So a lot of people will not be getting as much money back as they were last year or the last couple of years because they had the stimulus.
Mm,
They had the child tax credit at 3,000. Now it's knocked down to 2,000. So They changed the tax brackets. So all of that has changed. So people will be getting less money.
Now that is a big one.
But I'm glad you brought that up because the child tax credit, I have clients coming in just this week and they were talking about the $2,000 per child that you will get. That is up to 2,000 per child. It all has to do with how much money you make. So
Oh,
you do not get the 2,000 per child. The child tax credit tries to help you not to pay taxes.
okay.
So everything is not just straight fluid. Everyone says I get 5,000 for a child. It does not work that way. It all depends on how much money you have earned.
Is there like an example you can give, like, or a person that maybe makes 50 or 100,000? But and I know it all depends on a lot of things, but
Yes, I just happen to have something here.
look at that.
I'm just going to try to explain this the best way that I can for everybody to try to understand.
Okay.
Say if you had two children and you're filing head of household and you made $20,000. So the point is for you not to pay taxes on that $20,000. That's the whole goal. So you have 20,000 and just say they took out $1,000, I'm sorry. They took out $88 of federal taxes because that's what seems to be the problem now. Everybody's filing those W-4s wrong. So they
Hmm.
made 20,000. The goal is not to pay taxes on the 20,000. So, because they filed head of household, they're going to take this 19,400 off of the standard deduction that the IRS gives you. So now you're down to paying $600 of taxes.
Okay.
So instead of getting that $2,000 per child, they're going to take some of that 2,000 to pay that on that taxes of that $600.
Gotcha.
Okay, so now you can get the remaining on your return, but it all depends on that income. So because they made 20,000 and it was only two children, they only got $2,600 of that
Mm,
$4,000 because
gotcha.
of the income. So it has to do with your income and to help you not to pay taxes on the money that you earn.
Okay. Perfect. That was a great example. And if you make more than that, um, you
Then it
got at
helps.
least got a view of what that looks like.
Hmm.
Shayla from Charlotte, North Carolina wants to know, and I think you might have answered this, but let's just make sure. If she didn't file taxes for her LLC business last year, she can still file this year. She still has that 3 years.
Correct. But if she owes, she will be penalized for it.
Okay. Are these big penalizations?
Depends on her income. So
Okay.
it depends on her income. If she took a loss, did she make a profit? Now, if she made, if she's going to get a return, then she does not have to worry about it. But if she's going to
Okay.
owe and she made a large profit, if she did not pay any estimated taxes, which we find that a lot of our LLCs or our sole proprietors, they do not send estimated taxes, and they should. They should send their
Mm.
estimated taxes out quarterly.
And these are the kinds of questions that you're asking when you're filing their taxes.
We always ask, do you file? And everybody's like, no, so I try to tell them you have to file if you're going to make a profit. If you don't want to pay at the end of the year, then you need to send your quarterly taxes up.
Okay, very, very good. All of this stuff is some, as they say, news you can use. Um, and you're very knowledgeable. The way that you just rattled off all of that confusion that would be in my mind is huge. So, we thank you for providing us with your knowledge. And we really are wrapping up the show. I knew our question and answer was going to be straight to the point, and there it doesn't leave much wiggle room um, for too much, because you're kind of just spitting the facts, the information, the tax information. So tell the viewers how they can get in contact with you, if they wanted to obtain your services.
Well, we're located at 3013 West Ninth Street in Chester. You can email us at taxlove@comcast.net. And our phone number is 610-497-4258.
Repeat it back, all of it, one more time for me.
The
Sorry.
address is 3013 West Ninth Street in Chester. Our email is taxlove@comcast.net. And our phone number is 610-497-4258.
Okay. All right. Well, I cannot thank you enough for getting on here and clearing up some of our questions, concerns, and just overall knowledge. You told some things that I didn't know, and things that we really need to know, so that we can be on top of, how all of this works. I just know I hand it over, and you get what you get. But it's very Oh, really quickly, best tax breaks for businesses is what Halima asked.
The best tax, it depends on your business, but the best there, have all of your expenses together. That
Okay.
is your biggest tax break that you can really have for yourself
Hmm.
as a sole proprietor, is to have all of your expenses and keep track of your mileage. Nobody wants to keep track of that mileage, and that they think the gas is the only thing, but the mileage, keep track of your mileage. And if you have all that stuff, that is your biggest tax break for you.
Okay. Okay, that was perfect. Thank you. So we will let you go this evening, but you heard her. She's for the people, and she's located in the city of Chester. So if you want to go seek her services, please feel free to reach out. And that is the show for this evening. Join us next week when we will start talking about um, what it takes to build a strong financial house. We're going to have a four-part series of talking about what would it take to build a strong financial house. So hope you all can tune in, and I hope you have a wonderful night.
Thank you.
Thanks again, Miss Lovey.
You're welcome. Thank you for having me.